What's up, guys? How y'all doing? This is Mr. Cosmic, the Cosmic Training Academy, where we train, travel, and trade. Man, we are in the beautiful Pattaya, Thailand right now, and what I wanted to do is show some of you guys, new traders and stuff, how we take this small account and how we work it and slowly work it up a few dollars at a time every week. For example, here we go. We have Neo. You can see these underlying options that I'm dealing with. See my buying power. You see the total amount. So you can start off with $1,000 account. You can start off with a $2,000 account, and you can slowly make a few dollars every week. Put some gas in your tank, or you can just roll the money over and build your account up over and over and over again. Now, the common misconception is that you don't want to take $2,000 and put it into an account like this and only make $50 a week or $40 a week. But you got to keep in mind, $25 a week, $30 a week, whatever, for the next year on that 2,000. Think about that. If you multiply 30 times 52, that's 1,500 on a $2,000 account. Okay, that's almost doubling your money. So keep that in mind. And I think small-minded people or people who don't want to accept that you can take that money and money continuously coming in over and over and over and over again. So a lot of times it beats the lump sum that you get and you spend and you waste and it's gone and you have no way of making any more money. Now you have to sell your labor in order to bring in profit. And that's what we don't want to do, okay? The idea here is we want to use our skills and use the money that we've already made and take that and let it make more money for us. So let's get on. Neo, this is the option. I'm going to show you right now what Neo does. Right now, Neo is at $9 and about 10 cents. What you can do is you can see where my average credit is at on Neo. That's where I made money at. Today's my this my return. Total return right now is $2. The expiration date is April 21st. So that's in a week, about a week from now. Okay. All right. So um, that's that. All right. Let's go on down here, and you can see what we're doing. Implied volatility. You can see that. Uh-oh. Sorry about that, guys. You can see implied volatility. You can see theta. What is theta? Theta is time decay. Okay? Theta is time decay. All right? So keep that in mind. Theta is time decay. So what you want to do is uh, look at delta and you want to look at theta. Delta is showing you probabilities. Theta is showing you time. When you're doing selling, time is on your side. Time is on your side. You love theta. Nah, guess that's not really that cute. You love theta, right? Okay. So that's what you want. You want theta, and you want your delta to be in your favor. Okay. Now you can see the history. I got paid $14. Why did I get paid? Because I sold. Anytime you sell, you get money in the bank. Okay, money in the bank. Every time you sell, you get money in the bank. We all about that paper. Oh, that paper, dog, that paper. Okay, so what you want to do is make sure that you get that money in the bank. How do we get the money in the bank, guys? Okay, I'm gonna show you. I'm glad you asked. You go to here, you view options, right? There you go, right? So now, you said you got a small account. You can't afford a whole lot of stuff. Now remember, whatever you try to sell anything, you have to be able to afford 100 of them. If you only have $1,000 account, guess what? You can afford Neo. Why can you afford Neo? You can afford Neo because Neo costs $9.13 at this very moment. So you know, in fact, that if you had to pay for 100 shares of NEO at the price right now, you can, if you had $1,000, you still have the money to boot. That's $913 it would cost you to buy 100 shares of NEO, right? Okay, cool. So we got that under control. Let's go down here. But also keep in mind, sometimes you don't have to have that total amount of what the share price is right now because you may not be signing a contract for that amount. For instance, here we are. I sold one here at right there at $8.50. I sold. You can see where my contract says he sold it. Anytime you see negative is going away, that means I sold it already. You know? So right now, if you want to get into this same kind of contract, it costs you $12. I mean, they would pay you $12. What I love to look at, percentage. I love to look at chance of profit. Chance of profit is $79, 79%. So you know that you have a high probability of profiting if you sell that today. So think about it. Today, this is selling for this is expiration date April 21st. Okay, so that's a week from now. Today's Friday, my time. So in a week from now, if you put up $850, I didn't know I'd get the arrow. Okay. I'll take that. You put up to $850, you can guarantee you're going to get the $12, right? Now, what are we doing? We're selling puts, okay? We're selling puts to expire April 21st. I like these arrows. This is cool. So that's what we want to do, okay? We want to do that. And that means Friday, by next Friday, this one will expire. Okay? Now, that way you get to keep your $12 in your pocket, right? If it does not fall down to $8.50. If it falls down to $8.50, then you will have to buy it. You will be put. They will put those shares to you. That means you got to pay for these. Why do you think I'm giving you $12? I'm giving you $12 because you got to ensure me that you're going to pay for these if they fall to a certain price. For instance, what if I bought NEO at $7? But I wanted to make sure that I get out. I bought it at $7.50, let's say, and I want to make sure I get out of this at $8.50. And it's worth it to me to pay somebody $12 for the week to take them off my hands immediately if it falls down to $8.50. Right now I'm watching it go up because I see it going up. It's already up to $9. But what happens if it falls down to $8.50? I want to be out. Why? Because I know if it at $8.50 from $7.50, that is $100 difference. Okay, that's $100 difference because that's $1 difference per share. And since we have 100 shares, that's $100. So what that person would be doing is guaranteeing themselves $100 check no matter what. But they gotta pay $12 for that week. Okay. So now you got. I hope that helps you guys understand it a little bit better. So for instance, if you had $1,000 and you put it in your Robinhood account or you put it in your broker account, whatever, and you said, hey, I'm about to try to make my move, and you say, hey man, you know what? I'm gonna go ahead and go to April 28th. I want to go 2 weeks out. Now, see the cool thing about NEO, see how it pays every week? 21st, 28th, May 5th. You see, you can keep getting paid. The cool thing is you can scale this up. So say for instance you mess around and you had $1,000 this week and you turn around and you got another $1,000 next month. And you had, oh yeah, I got a free $1,000 that I don't have to do nothing with. Instead of me setting it in the bank and making 10 cents for a year, I can put it here into the options and then make $12, give or take, a week. A week, guys. Okay, so here's April The 28th. So that's 2 weeks out from now, right? Okay, let's take a look at that. Right now, we see the share price. We know what the share price is. The share price is what? $9.13. What we're going to do is we're going to sell a put. What does a put mean? It means going down. Okay, going down. So that means we want to sell somebody a contract should it fall below 913. All of these prices are below 913. So you're willing to sell, you're willing to buy it from the person selling to you at whatever strike price we're looking at, right? Whatever, those are the strike prices, okay? So, uh, let's just say, for instance, we wanted to go 2 weeks out on April 28th, and we told somebody we're willing to pay $9 for Neo. Here we are, $9, right? Okay. Say, for instance, we want to look at the short for that. That's $39, as you can see. You ain't got to even look that hard. That's $39. We sell a put right now to somebody, they got to pay us $39 for the expiration 2 weeks out. Let's say if we wanted to come to the 21st and just 1 week away, you want to get a check every week because you want to put gas in your tank using that $1,000 you put into your broker account. You want to put some gas in your tank, okay? So right now, if you go with a $9 one, they'll pay you directly $28. If we put this trade on right now, they're gonna pay me $28. Do you understand that? Okay, that's upfront. If you notice, that's minimum credit, right? Minimum credit is $28. This is limit price, basically telling you what they're gonna pay you between $27 and $29. You see, how many contracts? One contract. Okay, how much money do I have in my broker account? It's telling me, dude, you got 400 in your broker account. You can't even afford to be buying this one right now. Okay, so, but that's an example of what you can do, right? Okay, so just keep that in mind. So if you really want to do that kind of business, that's what you can do, and it'll even show you a profit and loss, right? So if you want to get a kind of an idea, a general idea, very general idea, it's telling you maximum loss is 8.872. Maximum profit is 28. That's what they're paying you up front. You know, if you buy it at $9, you have to think about this is 9. The break even is $9 minus your 28. So break even equals 872, right? So if you paid $9 and you subtracted 28 that they paid you, right here, 28, that's gonna put you at the 872. That's your break even price. You understand that? I hope you guys understand. I hope you're getting that. Okay, expected profit and loss. It's telling you that as NEO moves, this is your expected profit. In other words, if it stay above $9, you're gonna stay in profit for $28. You see that? As long as it's above 9, you're gonna stay in profit. The moment it start falling beyond 9, you're gonna start losing. This number that you got paid gonna start going down, 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 down. Okay, and to the point it's gonna end up being 0. Then you're gonna go into the negative. Okay, so keep that in mind. Maximum profit and loss. So you see that going down because the reason why, if it hits $9, every penny below you losing money. Why? Because you have to pay for it. You have to buy those shares at $9. Once it get to $9, now those shares are yours. That's the way you gotta look at it. So now every dollar that it falls below $9 is a dollar you losing per share. And that's why they're showing you that you losing, your expected profit is falling. You see that? Then once you hit 872, which is break even, you pretty much is right at zero, because now the money that you got paid up front for that, money that you got paid up front for that, is now going to be at zero, because you're going to lose all of that as it drops down to $8.72. Okay, I hope that's understood. I hope you guys get that. Um, so that's that. So keep that in mind, guys. Okay. So that's an idea of how you guys can take $1,000 account and trade it every week and make you a little something to put gas in your pocket, gas in your car, buy yourself some lunch for the week, and where other people might be struggling in that time, you've kind of tucked that $1,000 away, and you just come on your broker account, and every week, once this closes, and what the good traders will tell you, smart money will probably tell you, is that it's better to pay a little money for to buy that back. Okay, so smart money will tell you it's better to buy that back. You might have got paid $28, but it might be better to turn around and buy that option back on the Thursday or the Friday before it closes, and then reopen another one, because why? Time decay. Time decay. Don't forget, time decay is when you're selling options, time decay is on your side. So what happens if you buy that option back on Friday early and turn around and resell the option? You just got Saturday and Sunday time decay free. You see? So today is Friday for me. Today I'm going to go in and buy the Neo that they sold me back. Well, actually not going to do it today. I'm going to do it next week, next Friday. But I'm going to buy that Neo back on the 21st for whatever I'm going to buy it from. And I'm going to turn around and resell it, because I will get Saturday and Sunday free time, free theta working in my favor. So that's going to already put me 2 days ahead. If I turn around and wait till Monday to sell it, then I only have theta for 4 days, 4 or 5 days. That means the theta is not going to be as much in my favor as it will be if I sell it on Friday and get Saturday and Sunday free, because the market's closed or they can't even trade. So I'm making theta on days that the market can't even go against me, theoretically. Okay, so think about that. If you're going to do this every week, try to close your contract. Try to close your contract by buying it back. And how you do that is you'll come in, like, this is my contract. Say for instance, I've already bought Neo. I already sold a contract for Neo at $8.50. Right now, the current price is at $12. You can see right here, 12. I actually got credited 14. So I'm gonna lose $2 for the week. Okay, but the cool part about it is I can turn around and resell it right now, and get another contract. So I've already pocketed my 12, or I will already pocket my $12, and then basically what I'll do is I could either roll this position, which roll just means you're pushing it to the next expiration or to an expiration at a later time, or I could just buy it back and close it, and say, which it doesn't really matter in this situation, because with this broker, they're not charging you. Okay, so you don't really have to worry about your roll as much. So for instance, if I wanted to buy it back, because remember I sold it, you always have to do the opposite of what you did to get into the contract. If you buy a contract, you got to sell it to get out of it. If you sell a contract, you got to buy it back. Okay, so here's the contract right here, Neo, $9.16 right now. If I want to buy it back, I got to buy it back at $12. So right now I wouldn't do that. I apologize. Sorry, I confused you guys. I wouldn't buy it back at $12 right now. Why? Because I only got paid $15 for this, $14 for this. It's so expensive now, it's not worth buying back. You see, I'm not gonna lose all of my money. I'm gonna wait until this get closer to my expiration, which the closer you get to expiration, the lower the buyback cost is. Okay? So, for instance, right now we're still a whole week away because the expiration is 421. Okay, expiration is 421. I wish I can get this to work. Expiration is 421, right? Okay, so I bought. They paid me $14 right now to get this back. To buy this back, I would have to pay $12. Okay, I'm not gonna do that. And the only reason why that is so expensive is because we still got a whole week to go. So as the week progresses from today, which is the 14th to the 21st, this price is gonna keep going down, down, down. Okay, this price is gonna go down, down, down. It's gonna keep going down until we get to the 21st. It's gonna be at almost at zero. And so the closer we get to zero, then we can buy it back for a cheap price. And then that way we keep the rest of the money and we buy it back for that $5, $2, whatever the price might be. Okay? Hope you guys get that. That's that. All right. So another one that's kind of popular, and I don't suggest anybody take on any of these because I don't really see this one as being a viable one to for the long term. A lot of people saying, "Oh, it's good for a long term." Blah 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 blah. I don't listen to people's noise. If it got to make sense to me. So, but I see it as a good option to trade because it keeps bringing me in money on just $200. So again, here's another prime example of how you can make money, albeit small, but you just keep on making money over and over and over again. This is me selling a $2 Oakley put, right? So you can see where I'm going to go to let you see what Oakley looks like, the price, so you don't just look at the option contract and get confused. Here's Oakley Group, right? ADR just means they could charge you some money to manage this stock. So anyway, Oakley Group, right? You see where it's at? It's at $2.27. I sold a contract. Excuse me, guys. For $200. I mean, a cash collateral of $200. As you can see, that's why I say when people say you don't have it, you can't trade with it without a lot of money in options. It's just not true. There's $200. Can you make a lot of money without a lot of money? That's just not how capitalism goes. Usually, it takes money. Usually, now I mean, of course, you can leverage other people's monies, which you can do on the stock market as well. But usually, it's it doesn't. It takes a little bit of money. I prefer to use my money, but it depends upon what kind of business you're doing. Some businesses it's better to use other people's money because you don't take the risk with your cash, and sometimes it's better to use credit because you can keep your bankroll in your pocket and you don't waste all your money on a risk. Okay, so keep that in mind. In this particular case, I'm only showing you guys cash accounts. I don't show you margin stuff. A lot of people trade on a margin, take a lot of risk with the broker's money. Sometimes they hit, sometimes they don't. And a lot of the people who actually are just had come out the gate, threw a lot of money at something, and it blew up, and that got their thing rolling, and they say like they're a great trader, but they had been trading for 6 months and said they're master traders and they're great traders. You do the math, you do the math. I mean, some those people who are lucky are far and few between. Those people who did a YOLO with $10,000 of the money that they had made from doing Uber and then tell you how great a day trader they are. I mean, it's up to you to want to believe whatever you want to believe. So, but what I tell you is that I've been trading for 6 years, every day, every trading day, and there's no, and I'm the most unluckiest person. So, when I tell you something, I'm telling you from hard lessons. I don't get lucky. I don't just throw up 10,000 all of a sudden. Oh my God, I made $1 million off of this crypto. It didn't happen. And guess what? The majority of people, it don't happen. The people that you see that happening to is so far in between. It's just not a regular thing. So, but that's not what they're selling. They're selling you that this is possible, and in their minds it is possible because it happened to them. But in reality, for the average everyday person, it's probably not going to happen. Their timing is not going to be right. They're not going to have enough skill. They're not going to be lucky. Something's not going to happen right. Okay, that's just it's too many factors that have to come into play. So just don't get caught up in the luck. Get caught up in learning the skill. Okay. All right, so cash collateral is $200. Why? It's because it's a $2 put. Okay, so $2 puts require $2 in collateral. $200. Okay. All right, cool. So as you can see, I get a total return right now is $4. Sorry, it's $4. So that's that. All right. Here we go. The volume on Oakley is 1 million. So it's good volume. I don't know why it's fluctuating between 0 and 1 million. That's interesting. Um, you can see open. You can see the average volume. All that. Dividend yield. No dividends. 83% buy by the analyst rating. That's interesting. You can see quarterly earnings. And so a lot of people look at that. I see the expected earnings and they look at the quarterly earnings. And for what I look at, if what I see, if you really wanted to look at that, if you're going by earnings, um, this one is kind of is doing a fall. You see that? It went up one time here, but then boom. So, if I wouldn't go on that. Anyway, so but what we're doing is we're not worried about that because we're just trying to take dollars out the market, right? And you can see where you can see some of my trades where $10, this I sold it for $10, bought one back $5. You can see that. So um, that's the kind of things that I'm doing all the time. This is a $200 opportunity. So if you can build up your $200, if you take $50 a week, and by the time you end up with a month, you'll have $200 in your broker account, and then you can make $5, all the time. Let's just take a look. Trading options. I don't know where the color it brightened up on me. Um, so the thing about Oatly, as you can see, is that this expires every um, month. You see that? So you have to you have to discern as to, do you want your $200 to sit there for $10? Well, let's look at it. You know, let's look at it, Oatly. Let's look at it, Oatly. Um, so let's just say we wanted to trade Oatly. We wanted to trade options on Oatly. We wanted to trade April 21st options on Oatly. We wanted to sell puts on Oatly. Okay, you see the top, selling puts? We're selling puts. Okay, all right, on Oatly. Okay, so now we're going to find out. Here's the share price. You see the share price right there, don't you? That's the share price, $2.27. And then that's April 21st contract. Right now he's selling puts. They ain't paying no money. They're not paying any money right now. You have to go a month out. But you see, it's 90% chance of profit on the $2 ones. But I had already got into that a week or so ago. Let's go to May 19th. How much will they pay you? Okay, so here you go. A $2 put, May 19th. If you go to May, you can make $13 on that $200. That's not too bad. More than 10. That's about 10% would be $20. So probably 5%, 6%. Not too bad. whereas you're gonna get 6%. You know, it ain't gonna get in no bank in no 1 month. And if that's the case, then you can put $100 in the bank and you'll get $6 on top of that by the end of the month. That'll never happen. So don't lie to yourself. So anyway, it may not seem like, oh, that $6 ain't nothing. Or that $10, I'm sorry, ain't nothing. Well, $13. I apologize. $13 ain't nothing. Well, $13 off of $200 is actually a pretty good return. So once you compound that up, if you multiply 13 and you do 200 times 5, which is $1,000, that's 13 times 5 for a month. What is that? 13 times 5, 15, 65. $65 on your $200. I mean on your $1,000. You know, almost $100 on your $1,000, which is about six. Yeah, see that? 6%, 6.5. So think about it. You know. I hope that was helpful for you guys, man. I'm Mr. Cosmic. This is the Cosmic Trading Academy where we train, travel, and we trade. And we are constantly looking for a, an option to sell for our wheel strategy. Check us out. If you guys need somebody to be a one-on-one coach, if you need somebody to walk you through your trades, if you guys building up your account and you need somebody, check me out. I'm gonna put the link below on my Weebly, and you know we'll sit down and we'll do a one-on-one for an hour at a time, and I'll walk you through the trades and show you what to do exactly step by step. This is what I'm offering because people have been saying that, I've been having people this training, I'm doing this person to person things, but they said I should offer it online. Yeah, so I typically, usually post a video that people can download or something like that. But I'm now going to offer this one-on-one coaching to help people out. And of course, you can do payments and stuff through PayPal or whatever like that. So we're going to do that. And that way you can not feel like you're just watching videos and you're scared. Because when I first started trading, I was trading by myself and I didn't have any coach. My coach was the internet. And the scary part was that, oh man, I didn't know if I do this trade, will I lose all my money? And so that's where you need somebody to walk you through. And if you need somebody that, just give me a call, check us out, send me an email, cosmictrainingacademy@gmail.com. Leave me a comment on here. Go to any of my socials, which is, Instagram, um, Facebook and all that. You can leave me a message if you got any questions or whatever. And if you need somebody to share a screen with and help you walk through trading and help you build up your account, I'm your man. Holla at us, man. Holla Bidak, man. Mr. Cosmic, Cosmic Trading Academy, man. I see y'all on the other side, man. Y'all be safe, okay? Y'all be cool. All right? Stay out of trouble and stay in school.